So James, we have a lot to talk about today and dive into all the on-chain alpha I just mentioned. But just to quickly introduce yourself to our audience, can we have a quick 1-minute intro? Because I believe you're actually a civil engineer, and I'm curious to know how you went from that and fell down that crypto rabbit hole.
Yes. So you're right. I was a civil engineer, and I was a very particular type of civil engineer, which is a little bit strange, called geotechnical. So that's everything to do with the ground. And if you think about like structural engineers, steel and concrete is very different to geotechnical engineers, because we know a lot about steel and concrete perform like steel and concrete. The ground is what Mother Nature gives you. And it's a very, very different problem set. Digging a very large hole is a whole job to keeping it up. You know, there's a lot of risk. There's a lot of probability. If you design a foundation for rock and you hit clay, you're in a world of pain, and you don't know if it's rock or clay until you dig it up. So there's a lot of risk, a lot of probability. Markets, a lot of risk, a lot of probability, a lot of lateral thinking. You've got to think outside the box. So there's a bit of a connection there. Now, you're right. I was an engineer for about 10 years, and I fell down the Bitcoin rabbit hole. I mean, I bought the 2017 top, like the actual Pico top. It was the first thing I'd ever bought before in my life. And obviously, as many of us did in 2018, lost stacks and stacks of money. But there was something about the market, this whole thing about price and investing in Bitcoin and crypto. And I was trying to get my head around it all. And by the time we got to the end of 2018, start of 2019, my 10 grand is worth 10 cents. And I thought, okay, I got to go back to basics. So I read the Bitcoin white paper, and I realized that my spreadsheet of 50 shitcoins that had all gone to complete zero. I was like, okay, I've done something wrong. Back to first principles, read the white paper. I was like, okay. Bitcoin really started to click as like a genuine new monetary asset. And that side of it really clicked into place for me. So I discovered the on-chain side back end of 2018-19, start of 2019. Coinmetrics released the realized cap, which is, in my opinion, the most important metric in Bitcoin. It represents all the value that's been saved by people who've allocated capital to Bitcoin. We actually crossed $1.1 trillion in that metric this cycle. So it's a pretty significant number when someone says there's no intrinsic value. I'm like, there looks like $1.1 trillion of savings have been put into this thing. Anyway, that just captivated me. I started studying it, teaching people about on-chain data, joined Glassnode in 2021. As you said, ran their analyst team for about 3.5 years, and then spun off and did Checkonchain as of April last year.
Wow, man. I guess I have one question. What coins did you invest in that led you to fall from 10,000?
I mean, in 2018, you could have picked a basket of anything. I mean, I'd spread all the ICOs, right? I mean, everyone's got to come in there and burn your fingers a couple of times. It was classic investor sentiment, which now I use that investor sentiment all the time when in my analysis. I can see all the times that I thought, I'll sell here and I'll buy back later. And then it would rip and I'd be like, okay, the bull market's back on. And I'd buy the local top again. It would sell off. And every single time I'm trading Bitcoin for ETH for shitcoin 5, shitcoin 5 for shitcoin 450. And like, you just go down this list. And, you know, by the end of it, you're like, I've got this diversified portfolio of everything that's worth zero.
Yeah, the altcoin bag holder, all the veritable
so it was
collection
a tuition. You got to pay your tuition.
Exactly. Yeah. You end up a long-term community member, right? Okay. So that's very interesting. So you talk now about currently, trying to time markets and everything. And I guess that's what's on everyone's mind right now with the current market environment. Because I think the slide to 80K Bitcoin isn't something that many had expected at the beginning of the year, let's be frank. And you say you prefer sats on bloody red days. So firstly, is it safe to assume that you've been buying around these levels?
Yeah, so my base case for some time has been there was a level about 95K. I won't go into all the details yet unless we want to, but the short of it is there's about 65% of all that wealth, the realized cap I mentioned earlier, 65% of the wealth was allocated to Bitcoin, had a cost basis above 95K. Now, we attempted 2 all-time highs, 124 and then 125. I think it was July and August, if I'm not mistaken, August, October. By the time we broke down through 110, starting to go, guys, look, things are looking a little bit hairy. You've got to watch that 95K. But once you get to 95K, the trip between there and 80 is probably going to be very, very quick. And the reason for that is that when we rallied in this time last year, November, December, and we broke out of that 2024 chop range, there was very few coins that transacted in that 85 type zone. And there's a bunch of other price models and things there that just said, look, if we get to 95, things are probably going to get hairy very quickly and go down to 80. So I think, like most people, I didn't expect 2025 to be a red year. However, by the time we got into October, we were starting to say, look, it's getting a bit hairy. You get down to 110. Now you're down at 100. Once you get to 95, it's probably in a bad spot. And the trip to 80 is going to be fairly quick. And unfortunately, that is more or less what has played out. So really, it's about understanding incentives. Do we just see too many people buy too many coins at too high of a price. When you got 60% of the wealth or 65% of the wealth above 95, you go below it, that very, very quickly gets a lot of people on the wrong side.
Yeah, makes sense. And right now, in terms of the current price levels, like we're currently at about 87K. We caught something at the bottom about 80K. You've mentioned before on a few podcasts this level of the true market mean.
Yes.
Which could act as some sort of a support. Can you just explain that to our audience and why you think so? It's like kind of like a support base.
Yeah, so true market mean, it's about 82K. And the reason that's an important level is it basically captures the average cost basis for active investors. So there's two ways we can measure using on-chain data. We can look at where did everyone have, think about this as where is everyone's cost basis? Where is everyone's psychological level? Where do all those long-term people who are active in the cycle, where's their average price? Meaning we're at break even. And that's at 82. So 82 is about where everyone returns to their break even level. There's some people who've been around for a long time. There's some people who've been around and bought more recently this cycle. There's some people who only got in last cycle. If you take the big picture average of where everybody's cost basis is, it's about 82. The average cost basis for all of the ETFs is 82K. And if you think about it, this cycle, $100,000 Bitcoin is a different animal to $10,000 Bitcoin, right? We're just at a whole different, we're 10x larger in terms of size. So yes, there's people who still have a lot of coins from much cheaper prices, but the people who actually invested on a dollar basis, 82K is that center of gravity. So we've more or less compressed all the way down to the level. So from my perspective, and for me as a long-term hodler, you're going to give me coins in the 80s, I'm going to take them all day. So to answer your previous question, yeah, I'm a very happy stacker down here, but I'm also very aware that we probably aren't done with this correction yet. There's probably a bit of process to go. Bottoms take time to actually hammer out. I don't think we've completely hit capitulation just yet, but I also think a pretty significant amount of the damage that was going to get done probably has been. So, this is one of those things that we assess as it plays out.